Anyway, global stocks plunging overnight. Join us now, Barry Knapp, Managing Director at Ironsides Macroeconomics. You got negative last month on technology, Barry. I don't know if you got out before everything happened, or what was it? Middle of the month?
Yeah, August 22nd was when I wrote the note and downgraded the sector. So.
And said go into cyclicals, industrials, and you don't think it's too late to do that?
No, I mean, if you think about what's happened since early September, the S&P was down 7.5%. That's before the overnight sell-off. So now we're closer to 10, obviously. That's been dominated by the consumer discretionary sector, which, of course, is 25% Amazon, information technology, and communication services. And so it's really been the mega cap winner take most companies that have taken the market down. Industrials, materials, and financials are flat during that time period. So for me, this represents an opportunity. We thought there would be a pullback around this time frame. There's all sorts of risks. I didn't expect it to be all about TikTok or WeChat. What'd you call it?
WeChat. Yeah. People think I was serious, too. They say, wow, he really needs to. That's what I love. And then I said, did you hear the one about the ceiling? I mean, do they not get any? It's over their head. Anyway.
It's early in the morning, Joe. But
I guess it is. I shouldn't even try. What do you think this has run its course? I don't think you do. Do you?
Well, I not for the technology sector itself necessarily, because if you look at what's behind all this, the data has been getting considerably better. So I listened, to your show and Brian's show for a while as well. And I kept thinking, well, the two numbers that I really liked overnight, one was the Korean export numbers for the first 20 days of September, which went from, negative territory to positive territory for the first time during the COVID recovery, and the Taiwanese August export orders, which were much stronger than expected. So if you recall, we had very weak global trade activity because of the Trump trade war. That was beginning to rebound before the COVID pandemic hit. You've got very low global inventories. You've got the makings of a very strong rebound. We get the flash PMIs for September this week, more of the regional Fed manufacturing surveys that have been showing a pickup in capital spending related plans. So, I think you have the makings of a decent, strong recovery. Even the inflation measures, part of what I wrote about this weekend was called recovery and reflation, because prices are starting to head up as well. So to me, it looks like the economic recovery is gaining momentum. And that's behind why these other sectors are doing well, and some of the work from home stuff is starting to stall out. So, on this morning's weakness, I would definitely be a buyer of those cyclical sectors. If you want to buy S&P down 9.5% is probably a pretty good spot as well. But I would be buying recovery beneficiaries into this weakness.
Yep, the Journal has your South Korea numbers as well as some positive stuff out of Germany. It's kind of surprising. Global trade bouncing back much more quickly than in 08, because it's not, it was not an artificial shutdown, but you shut it down and there weren't some of those systemic underlying problems with the financial system, I guess. So people that call it a 2-month recession, that sounds crazy because there's still so many lingering effects from the pandemic, but it still is different than the financial crisis in terms of things bouncing back globally in terms of trade, which is, I don't think we knew that. This is kind of surprising, isn't it?
It is. And part of the trade story I think that people are going to struggle with is I am in the deglobalization camp, and we are going to restructure global supply chains. They had gotten way too stretched. The stories about the Boeing 787 are a case in point. That plane was pretty much a virtue signaling global supply chain mess, right? But this deglobalization trend is going to persist throughout the decade. But the fact is that global trade was really weak in 2018 and 19, and then the pandemic really caused it to get hit. So you've got scope for a very persistent, sharp rebound. And I think that's what's going to take a lot of people, or catch a lot of people off guard.